What's going on, everybody? Welcome back to the channel for another weekly market update. Yes, we got another weekly market update here, and there's just so much to talk about. We're going to go in details about what's going to be happening in the next weeks, next months in the market. Where are we? We're going to be talking about the inversion of the yields. Is a recession coming? Is it not coming? What should you be doing? Where should we be investing your money? And everything in between. So make sure watch this whole video. It's gonna be such an important video for you guys to watch. So make sure you stick through the whole video and really pay attention. If you want to learn more about the stock market, the crypto market, and want to trade live with me, make sure you subscribe, hit the links in the bio, leave a comment, let me know what's up, let me know how your week was. We had a great week over at Small Players. Call outs being fired all last week, and we plan to keep that going. So make sure you come check us out. All links are down below in the bio. But first of all, let's talk about the S&P 500. What happened in S&P 500? Well, first we had this massive, we printed this wedge and we broke out of it. We had mentioned that we thought that this was going to be the bottom, this by being the Fed meeting day. Now we thought the bottom would be more on this $400 mark, so on this range down here. We didn't end up not dipping that hard, but we were expecting that on the Fed meeting day was probably going to be a bullish day. We were going to put the Fed 0.50 potential hike rate behind us. He came out at 0.25, being very bullish. So pretty much this whole drop here, if we analyze why did we drop here, it was because we were unsure where the Fed was going to do when it came down to their monetary policy. They went with a tightening monetary policy. We didn't know how tight they would make that, and ended up being bullish when we finally found the bottom there. We had a strong breakout, and I didn't expect the breakout to be this strong, but it was a really strong breakout. Now, potentially what we're seeing here, after a massive, breakout, we even broke above this double top level here. We most likely going to get a dip. We closed under the 50 here. We had a pretty strong sell-off towards the end of the week. And now the most likely scenario is maybe come and back test this previous breakout level. Probably around these lows is around 430. Maybe make an inverse head and shoulder pattern before we break out and we test the 500 level. Most likely that's probably what we're going to be looking at. And I know a lot of people, are looking for potential inverse head and shoulder setup. And if you do remember, we actually had been mentioning this inverse head and shoulder setup when we were all the way down, weeks and weeks before. That was most likely the scenario we're going to be seeing: a rip up, retest, and then keep going up. We don't believe we're in a bear market currently, and we've been saying that from the start. We do believe we're probably seeing another all-time high level, around this 500 marks until we do see a bear market later into this year. That's a statement that I'll keep, standing by right now. So that's kind of what we're looking at. Also wanted to point out, if we go to the weekly time frame, we are seeing a bit of a gravestone, a gravestone doji here on the weekly time frame. Doesn't mean it's usually after an uptrend you get a gravestone doji to then sell off. So then we might see that sell off down here in the 430s. I think if the 430s don't hold, then we might see lower. But we do have this gravestone doji. It doesn't mean we have to reverse, but usually it's a bearish pattern when you see the gravestone doji, especially on a weekly time frame. Now we'll see how that plays out, but it is something I did want to point out. I didn't see a lot of people talking about this. So now let's take a look real quick at the triple Q, similar to the S&P 500, but looking more bearish. Main reason is we got rejected on both too strong EMAs. They made 100, made 200, which right now the S&P 500 is over, but the triple Q here we can see it. It's below it. Got rejected really strong here. Now it's about to have this death cross here. The 100 crossed below 200 already. The 50 already crossed below both. So really tech is probably looking for another, most likely leg down, and might make retest these 350s here, potentially making that inverse head and shoulder like we talked about with the S&P 500. But it is definitely looking a lot more bearish, I think, the triple Q and the Nasdaq than the S&P 500. Was with fear of a market top, the technology sector starts to do bad, right? So if we go to our business cycles, and here we can see the business cycles through pretty much a financial cycle and the rotation of where the money follows. When you have a strong bull market, that's when technology starts doing really hot. When the market starts topping, which we might be seeing right now, that's what we believe we're seeing before ending to bear market, which would be this back end here. we see technology, technology is strong at a market bottom into a bull market. That was why, technology was strong. If you go back to our S&P 500, technology has been leading the charge since we had this market bottom here, and now we're believing we're seeing a top, right? We'll see something like this, maybe, or maybe a little higher like this, something around those lines, and then fall back into 400s or whatever it is. Then a lot of this technology is probably going to start looking worse. So then, where is money going to go? They're starting to switch into basic materials, industrials, staples, healthcare, and those are your gold, your oil, and things like that. And then as we start going towards the bottom part, then we'll start seeing the healthcare, staples, utilities, finance really start doing much better. Because when you head into bear market, really finance is the one that outperforms the most. And if we actually go to FinViz, you can go to groups here and you can see what's been the most strong performance so far. We see energy being the last 3 months. Relative strength has been energy. Let's see technology as being the worst. So that kind of showing us that we're rotating from technology into these basic materials and industrials, which will be this energy sector, and oil being one of those big energy sector players. If we go back and we look at XLE, which are sector fund ETF, this XLE has been a play we've been in, guys. XLE has been one of our hottest plays. We were loading up down here, and now had a really strong move up. And right now it looks like it might be looking for another move up. It's ripped up, sitting right below a strong resistance level. And these are all levels that we drew out much before that, it's been respecting it so nicely. But I think right now we're looking for, or at least for myself, I'm really looking for that close over 78 and 80, really 80, a close over 80 to keep seeing that pushing higher, because right now we might need a little bit more consolidation before we get that next leg up for the XLE, and the XLE is the energy sector fund, right? But another one that I would like to talk about, we're seeing in this last month now, we saw the 3 months. Let's talk about the month. We saw utilities, energy, basic materials, and healthcare and real estate really outperforming everything else. And if we zoom in even more closely, in the last week, we saw real estate just being so strong. Real estate, healthcare, being really strong. Something that I have my eyes on right now. Both, consumer staples, another one too that I have my eyes on. There's definitely a lot of potentials out there, guys. Just because technology doesn't do, it's not doing its thing, doesn't mean much, right? There's a whole lot of ways to trade the market. XLP is looking really, really good right now, which XLPs are consumer staples. I think that's the next one to probably have another leg up before we get into, staples are here. And then we see healthcare, utilities, and finance. I think right now we're nearing this market top, so a lot of money is going to these industrial, basic material staples, and kind of throwing a little bit into healthcare. People that want to get ahead of the healthcare play, and being ahead is usually really good because you always want to buy into the dips. We saw the XLP weekly so strong, keeps bouncing on the 50 MA. And XLP really has been strong, ever since of the COVID crash, but outperforming everything else. We saw a strong bullish candle here on this weekly breakout on this flag that we've seen. So definitely something that I'm looking at for next week. And consumer staples, you can simply just look at XLP top holdings and trade those single tickers. You don't have to trade the whole ETF. You don't want to. It's just easier to look at the ETF as a whole. Then if we take a look at the financials, again, something that it's starting to interest me. We might be still early on this play, but like I said, we like being early. Potentially setting up a little bit of inverse head and shoulder pattern here. Excuse my drawing with the arrow, but if we see another, keep in mind we're in the weekly time frame, so we're looking a little bit more on the macro side. If we zoom in more on daily, now we are seeing some MAs kind of flipping over, but financials is the play that one of the places that I'll be looking at. And XLRE, real estate ETF fund, something that's been strong this past few days. Again, kind of like an inverse head and shoulder pattern here, where we broke out of it above this 48, where we had a little bit of a gap. Now, if we do see some more consolidation under this 50, and then we saw a breakout above 50, I don't see much room on why we couldn't move to 355s. And now I know these move much lower than we were used to with technology, but that's probably what allows some of that all that money it has is going to be going into, as we can see. I mean, we just really famous. If you go to groups, we can just see where the money is flowing onto. We can see technology just being lacking. This, negative in the last 3 months, worst performing. Half the year, negative for half the year. Look at energy, basic materials, and utilities, and it just proves that where are we? We're basic materials, industrials, and moving to the staples, healthcare, utilities, and finance eventually. So we gotta follow this macro flow of the market. And just it's kind of like we're going. We go back to our 10-year versus the 2-year, which was the inverse our inversing of the bond yields. This is the biggest red flag to cause a recession. Probably one of the strongest. We draw this at the zero level. Right now we're currently at the zero level. We can see it happen, multiple times through history, and every time it's led into recession, unfortunately. And, there's not much to say about it. When the yield curve hits zero, it marks usually the market top. So I'm gonna get that right. It marks the market top. So this means the market's topping, and now we're going to go into a recession, right? But usually it is between 6 to 12 months. If you follow the videos, I've been saying this 6 to 12 months. Doesn't mean, I'm not saying the market's going to crash tomorrow or the next month. I'm saying end of 2022 into 2023, we'll start seeing more of a recession. We saw that 2000 bubble. We saw that 2007. We saw that, the 90 bubble before the COVID crash. And we're seeing that now. So, that's just the facts. We can't really be fighting it. We just gotta go along with it and make money either way. It doesn't matter to us. If I bring here and I change our ticker for the bottom to the S&P 500, and if we turn the S&P 500 here, we add and we lay it over, we see that, every time these curves, look at this. Here, hard to tell, but at the bottom right at the top here, then we crash down, top here, crash down, inverses here. So this top here, crash down, and now we're seeing the inversion around here. So I think we'll see some more higher around that 5,000, and then the move down, I think we'll see. But usually during the end of the bull markets are when you see the biggest gains. You see these really strong rallies. So there's a lot of potentials out there. Don't feel like you shouldn't be trading or anything like that. But the end of the bull runs are some of the biggest possibilities out there. There's that last squeeze. Everybody's trying to get the money out. The strong rallies between the people that are thinking it's still a bull run, the bears that aren't sure yet. So there's a lot of strong squeezes out there. So we gotta make sure that we take it fully advantage of this game. And another thing that I like to point out that the Feds understand that these yield are this yield inverting is not a good thing. So it might lead them to maybe pull back a little bit or not be as aggressive on this monetary policy they've been speaking about. Now I could see a thing where we sell off until the next FOMC meeting, and then maybe there we get that kind of inverse and shoulder down here for 30, and then from there we get a nice rip up, because they might say something like they might end up being less hawkish than they've been, and more maybe lessen up on those monetary policies. So they might be the last kind of rip and melt face up into those 500 and kind of have the market top from there. So there's a lot of things that are going to be playing out in these next weeks and months. So there's a lot of things to be excited about. There's a whole lot of gains to be made. Promise you, both in S&P 500 and for Bitcoin. Bitcoin is probably looking for another melt up as well. Let's take a look quickly at Bitcoin. If we take a look at Bitcoin, it's something that also I don't think it's quite done yet. I still do think it might have room up. The biggest issue that we're seeing right now is this 200 MA. This 200 MA has been just such a strong resistance. If we can break above that, then we'll definitely have room into the mid 50s, and after the mid 50s, who knows? We might see the 60s and 70s soon as well. So I think Bitcoin does have another potential leg up. Recently broke out of this little bit of a triangle here they had, and as long as we get over this 200 MA, I do think it definitely has a lot more room up and we might see one last push from Bitcoin as well before it goes into a bear market alongside with S&P 500. All that will have to be, kind of how the Feds are going to manage this. They know the yields are inverting. They got to do something about it. They know inflation is really high. They got to do something about it. They don't want to crash the stock market. They don't want to be pinned down as the bad guys. The whole COVID thing is not going to be a scapegoat for them anymore. The Ukraine thing is not going to be a scapegoat for them. They're definitely in a really, really tough situation right now. Because, even if we go back to the yield, inverting here, a lot of times this yield inverting came at the end of a tightening monetary policy. But we're seeing the monetary policy campaign from the Feds have kind of just begun. They haven't done much about this inflation. They just started this year with those rate hikes, and pulling money out of the market. I started, very recently. So, every other time in history, the yield inverting was caused by the end of the Fed's tightening money campaign. This is more towards the front side of that. So are they going to decide to have that cut that sooner, which causes another rip up, helps the yields for not inverting, pushes the bear market or, the recession later through the year? Are they going to decide to, hey, we got to stick this out, the yields are going to go even lower, cause that market to, dip sooner? It'd be very interesting to see. We'll see, another stocks of another 25 or 0.50 increase in the next FOMC meeting. It'd be very interesting to see how that plays out. But this is kind of what I'm looking at. Whole lot of things to see, a lot of things to be played out next week. There's been, another ticker that I have high on my watch list because there's been some really good news on it lately. Is Tesla. I don't love the price action, but there's been news. It has some great news with the potential stock split. With the sales report, averaging 100,000 cars every month this first quarter. So you might see a nice breakout into top side, So this is something I'll be looking at with Tesla. It's going to be one of my high watch lists for next week. Or we could see a thing that this news was factored in and now it can dip, it can recover some of this huge move they had down here. Both are still potential plays. I will have to see how the price action moves next week. Let me know in the comments down below. What are you guys watching next week? What are you playing? What are you trading? It's just so much fun to be had in this market. If you want to join us, hit the links in the bio. Trade live with me every single day. As always, guys, leave a subscribe, leave a comment, leave a thumbs up. Follow the Instagram, the TikTok. We've been killing it. And as always, peace.